Today we are going to discuss about the preparation of financial statements of a manufacturing business. First we will see what is meant by manufacturing organization. Organizations which produce or which manufactures goods can be referred as manufacturing organization. Let's see what is meant by production cost. Production cost is the sense total expenses which are incurred as a result of production process. Those are the basic definitions you should know. Then we'll see what are the elements of production cost. As you all know, cost includes three basic things: material cost, labor cost, and other cost. Here, production cost we can classify into two: primary cost and production overhead cost. Primary cost includes three things: direct material cost, direct labor cost, and direct other cost. The other side, production overhead cost includes indirect material, indirect labor, and indirect other. So you can understand that primary cost in the sense direct cost, all the direct cost. Production overhead in the sense all the indirect cost. So we'll see here direct material cost. First one is direct material cost. Direct material cost means the cost of material that can be directly identified with the production unit. So as example, if it is a furniture manufacturing business, the timber or wood can be considered as direct material. If it is a garment factory, clothes can be considered as direct material. Those are the things which can be directly identified with the production unit. Next, we'll see the direct labor cost. That is the wages paid to employees who can be clearly identified, who is directly contributed to the manufacturing process. So we'll take the same example. If it is a furniture manufacturing entity, carpenter's wages or machine operator's wages can be considered as direct labor. If it is a garment factory, again the wages paid to machine operator can be considered as the direct labor cost. Next, we'll go to the direct other expenses, other direct expenses. It says expenses that are directly attributable to production but are not direct material or direct labor. It is directly connected with the production unit but that is not direct material or direct labor. So those things we can consider it as other direct expenses. So as example, the cost we have to pay for the designers. If it is a furniture manufacturing entity, for the furniture designers we have to pay some amount of money. So that should be considered as other direct expenses. So we can term it as royalty payments on production units. If it is a garment factory, the designer charges. Those things can be considered as other direct expenses. So the production overhead means all the indirect cost: indirect material, indirect labor, and indirect other. And also in a manufacturing business, the stocks can be three types. That is, first we can identify the raw material stock. Second, we can identify the stock work in progress. That means unfinished goods. Third one, finished goods stock. You have to know that the manufacturing business consists of three types of stocks. So we'll see how to prepare the production statement. Next, you should know how to prepare the production statement. So go to the format. This is the format for manufacturing account. Here, first you have to write the account statement name with the business name, manufacturing business, manufacturing account for the year ended. Time period you have to mention. Normally we can prepare for this for the 1 month, quarter. Then we'll see. Here first one is opening stock of raw material. I told you in a manufacturing organization the production cost consists basically three things: material cost, labor cost and other cost. Here our basic thing is we have to calculate the primary cost. So as you all know that primary cost includes three things: direct material cost, direct labor cost and direct other cost. In this statement also we have to follow the same thing. Here first we have calculated direct material usage. To calculate direct material usage, first we have to take opening stock of raw material. Here I have taken opening stock of raw material. For that you have to add raw material purchase, and also for that you have to add any transportation cost. It means carriage invoice should be added. And also if there's any raw material returns you have to deduct. Then you can get answer direct material to be used. That means total. What is the total material you can use for the production process? But sometimes there may be closing stock of raw material. So when you deduct the closing raw material stock, your answer will be direct material usage. Now you have come up with the answer for the direct material cost. To calculate prime cost, you have to add labor cost and direct other expenses. Here, next, direct labor cost and direct other expenses I have added. Then it will be equals to the primary cost. We'll see this is the first part of the statement. We'll see the other part. See, production overhead cost. You have to write the title as production overhead cost. Here, no need to classify it as indirect material, indirect labor and indirect other. You can write all the production overhead cost. That means all the indirect cost under this production overhead cost. I have mentioned 4 examples: factory insurance, factory rent, machinery depreciation, factory electricity, supervisor wages. Like that you can mention all the production overhead cost. Then you have to take the summation to the other side, and summation of primary cost and production cost should be taken. That is not equals to the total production cost. Why? Because before you calculate it, you have to adjust work in progress. I told you in a manufacturing organization, stock consists of three things: raw material, work in progress and finished goods. Here, opening work in progress should be added and closing work in progress should be deducted. After this adjustment, you can come up with the answer for the total production cost.